I want to welcome every one of us once again to today's webinar. We are going to be considering or talking about the basics of financial planning. Like we all know, financial planning is a very broad concept. So we'll be taking time to narrow it down as it relates to each and every one of us in terms of planning for investment. The presentation will last for the next 30 minutes. The first 15 minutes, I'm going to be doing the presentation, while there will be question and answer session for another 15 minutes. You can please drop your question on the Q&A box. We are going to take them after the presentation, not on the chat box, please. Thank you. Financial planning, as we all know, involves a comprehensive evaluation of a person's financial state. It entails setting financial goals and investment planning. It also involves the calculation of risk, the mitigation of risk in case you are trying to invest in a particular instrument. Financial planning also involves retirement planning. It also involves estate planning. If you look at the diagram below, it gives us a clear understanding of what financial planning is. Like I said, goal setting, it involves financial goal setting. It involves making investment. It involves estate planning, making retirement plan for yourself, risk management. Financial planning is all about, it's not just all about you having money or having funds. It also involves you having enough resources to take care of your daily needs, help you maintain a very good standard of living, and help you to also help you to fulfill some of your wishes after retirement. Now we need to ask ourselves this question: if you are financially free. Before undertaking the process of financial planning, you need to know what you own. You also need to know what you owe. Then you also need to know your net worth, which is the positive difference between what you own and what you owe. Now, why planning? Why do we plan? Why do we plan? Planning is very important for individuals to attain a certain level of financial security. You plan to be able to meet unforeseen circumstances or emergencies. You also plan for you to be debt-free in the future. You also plan for you to be able to have enough money to live the best life you can live. You also, one of the key reasons why you also plan is also to meet your financial needs at old age. That's retirement. So financial planning is very key. It's not something that should be taken lightly. Now, you also plan to also achieve the most important thing in your life and your family. What are the steps for setting financial goals? There are a lot of them. We are going to consider a few of them in this presentation. The first step one should consider when making financial plan is write your goals and be specific about it. Now, your financial goals help you, once you have a financial goal written down, it helps you visualize them. Now, your financial goals must be clearly defined. It must be simple. Your goals should not be vague, something that you cannot really, phantom. Somebody cannot just look at it and understand what you are writing. So it must be very simple and straightforward. And it should be specific and realistic too. You need to make realistic financial goals, goals that you know are easily attainable, not vague goals that are not easily attainable. That's the first one. Second, you need to identify your time-specific goals. Like I said earlier, in identifying your financial goals, you need to put them down in various forms. Now, in the course of this presentation, we are going to look at how you can put your investment, your investment goals in a short-term instrument. Your goals can be short-term. What that means is that your goals should you should be able to achieve such goals in the next 1 year. Then you have medium-term goals also. These are goals that you achieve within the next 5 years, within 5 years. 1 to 5 years, while the long-term goals are goals that you achieved, that you set to achieve from 5 years above. That comes, retirement plan comes, when you talk of 5 year goals, you talk about retirement planning. So once you have been able to identify this goal, you break them down into short-term goals, into medium-term goals, and into long-term goals. The fact that you have a goal written down in the medium term doesn't mean that you cannot. Okay, let's look at the next slide. Now, your priority. The third step is priority. After listing your financial goal, it is also very important for you to list them down. As I was trying to say not quite long, the fact that your goal is written down under the medium-term goal doesn't mean that it cannot be important. It can be very important that you can put it among the first priority of what you have. Then number 4, you also need to analyze your current financial situation. When you are planning, you look at what you have currently. What resources do you have at the moment? How much do you earn? That will enable you plan effectively. The 5th one is set up the plan towards your financial goals. That is, make the plan work. What are the action steps that you need to take to achieve these goals? You need to set them out in motion. Then, basic fundamentals of financial planning. Let's look at the basic fundamentals of financial planning. The first one is that you need to start where you are. You can say that, oh, I'm 40 years old, I'm 50 years old, I don't have any plan. How do I start? Start now. Start where you are. Now, calculate your income, your income and your net worth. That will also help you to determine how you can go about your investment. Number 3 is that you write down your goals, like we said earlier. Write them into 3 categories, into the short-term goals, medium-term goals, and long-term goals. Then 2, budgeting. My colleague spoke extensively on personal financial planning the last time we had the webinar. He dealt extensively on the budgeting. Now, you need to create a budget for yourself and stick to it. When you don't have a budget, your financial plan is bound to fail. When you have a budget, create a budget, stick to it. Now, having a budget doesn't mean that the budget cannot be reviewed from time to time. You can take out time, review it, make an additional plan or make an adjustment. It doesn't mean that your budget cannot be reviewed. It can be reviewed. It is necessary for you to make it and stick by it. Then also you have to think before you buy. A lot of impulse purchases, that a lot of things we buy, at the end of the day we discover we don't need them. So you need to think before you buy. That's why it is necessary for you, anytime you are doing shopping, you have a list. When you have a list, at the end of the day, you'll be able to tick what you have been able to, what you want to buy and what you have bought. Have an emergency fund set aside. We'll talk about this during the course of this presentation. The next fundamentals is invest. Like I said earlier, I said financial planning involves a lot of risk management. Now, when you want to invest, you first of all need to analyze your risk. What are the investments you can invest in? There are investments that are low risk, there are some that are medium risk, and some that are high risk. So you need to analyze them before you invest. Otherwise, you need to speak with a professional. You speak with us at Afrinvest Asset Management to be able to guide you on how you can go about that. Go beyond savings and invest. Invest in line with your goals. Whatever investment you are making, it must be in line with your financial goals. That's the reason why your goals must be written down. When you have nothing written down, you are bound to make mistakes while during the course of you investing. The next step is grow your investment. Now, after investing, you need to track your investment. Ask for periodic statements. It might be monthly, it might be quarterly, it might be biannually, but track your investment. Don't just invest and just go to sleep. You need to be able to track it. That is when you'll be able to know if you are making progress or if what you have invested in is in line with your goals. if what you have invested, what you have invested is not in line with your expectation, you can call for a review. You can do a review about it. But if you have nothing written down, you will not be able to you will not be able to track what you have. Now, increase your investment from time to time. After you have invested, increase your investment. There are most times that sometimes your income increases. As your income increases, you also increase your investment. You also diversify your portfolio, which will help you to either mitigate against risk. Now, where to invest? Where do you invest? There are a lot of investment options in the market. There are some that will tell you, come and invest, you get 100% return on investment. You need to be careful with such investment. That's why we're here to guide you. Now, what are the investment options we have? As you have seen in the graph, you can see that investments are categorized into low risk, medium risk, and high risk. And the lower the risk, the lower the return, and vice versa. Now, let's look at how you can start. From investment, you are meant to have some cash with you. Your cash is necessary to meet your daily needs, day-to-day running of either your household or anything you want to, whatever means how necessary you want to run that. Now, you need to have a savings account also. You need to, there are fixed deposit investment. In Afrinvest, we have an investment called the Afrinvest Income Portfolio. I'm going to talk a little about that later on. There are treasury bills, money market funds. We have the Afrinvest Dollar Fund also. You can also invest in that. And there are balanced mutual funds. You can also invest in them. There are equities. Then there are equity-based mutual funds, and there are real estate investment. You can see how it is. The higher the risk, the higher the return. Now, mutual fund is an investment where you pull a lot of funds from different class of investors and invest into a particular securities. Securities can be stocks, it can be bonds, it can be fixed income securities. At Afrinvest, we have a 4 registered fund. We have the Afrinvest Plutus Fund. We have Afrinvest Equity Fund. These are Afrinvest Equity Fund is an equity-based mutual fund. We have the Bond Fund, which is the Nigerian International Debt Fund, and we have the recently registered Afrinvest Dollar Fund. The fund is currently open to both private and corporate individuals. I'm going to talk about this subsequently in the subsequent slides. Then when you invest in a mutual funds are invested. When you invest in mutual funds, your funds are invested in the pool of diversified investment, and the funds are professionally managed. They are affordable, and we have free entry and exit. Now, the Afrinvest Dollar Fund is an open-ended fund which invests in dollar-denominated federal government securities. Now, they are invested in federal government dollar-denominated securities. Now, if you are buying Eurobond directly, you need a minimum of 200,000 to be able to invest in any of the Eurobond. But with the creation of this fund, it gives an opportunity for an investor that has a minimum of $1,000. With a minimum of $1,000, you'll be able to invest in this fund. Now, the objective of this fund is to help you grow your income, achieve capital appreciation in the shortest possible time as possible. Now, let's look at the features of the fund. We have capital appreciation. Like I said earlier, low entry amount. You can invest with a minimum of $1,000. Then the investment is very flexible. You also invest in a diversified portfolio. Then the investment has a competitive return of between 6 to 7.5%. Like I said earlier, the minimum you can subscribe to it is $1,000. Then it has holding period of 180 days. Coupons are paid biannually. The redemption takes 3 to 5 working days. And the investment is domiciled with a custodian for those who want to know how safe the fund is. Now, the Afrinvest Income Portfolio is a near cash investment that is invested in fixed income securities like fixed deposit. We have commercial papers, bankers' acceptance, and so on. They are all into a pool of one basket. You invest into a pool of the basket. It is near cash. What that means is that it is very liquid. So you have funds you have in your account, you are not, it's just there in your account, you are not making use of it, you can invest in this fund. It will, whatever whatever duration you plan looking at, you can invest for 30 days, you can invest for 60 and 90 days. And the investment, the interest is guaranteed, even though the interest is paid at back end, and the fund is also cost effective. Now, one of the benefits of the fund is that the fund is liquid. It has